Hello guys, glad to have you back on our channel. Today we are going to calculate capitalizations of average profit method. The problems are: from the following informations, calculate the value of goodwill. Average capital employed rupees 12 lakh. Company declares 15% dividend on the shares of rupees 20 fully paid, which is quoted in the market at rupees 25. Which means they are declaring dividend of 15% on fully paid of rupees 20, but that market price is 25. Next, sundry assets of the firm rupees 15,85,000 and sundry liability of the firm is rupees 62,654. Net trading profit of the firm for the past 3 years rupees 2,15,200, 1,81,400 and 2,25,000. In order to calculate goodwill under capitalization of average profit method, we need to adopt formula for that. The formulas are capitalized value of business minus actual capital employed. The average capital employed rupees 12 lakh provided. It is for our reference. It's often used for calculating super profit method, but for this method we need to calculate average capital employed through deducting sundry liabilities from sundry assets. Company declares 15% dividend on the shares of rupees 20 fully paid, which is quoted in the market price 25. Here the company declares a 15% dividend on rupees 20 fully paid up shares. So we need to calculate NRR. Next, the net profit is given for 3 years. In first we have to calculate average profit to get capitalization value of business. To calculate average profit, we have to add the profit for the 3 years and divide the total by 3. Now we got rupees 2,07,200 of average profit. Next, normal rate of return we need to calculate. The formula for that normal rate of return is dividend by market price into 100. Here dividend is 15% and market price given rupees 25. So 15 into 20 by 25 will be getting 12% of normal rate of return. Now we have average profit of rupees 2,07,200 and 12% of NRR. To calculate capitalist valuation of business, if you divide the average profit by NRR, you will be getting rupees 17,26,667 of capitalized value. Next, we have to calculate actual capital employed by subtracting liability from the assets. Next, we have to calculate actual capital employed by subtracting liabilities from the assets. Here the liability is rupees 62,654 given and assets rupees 15,085,000 given. If you subtract liability from assets, we got rupees 15,22,346 of actual capital employed. Finally, to calculate goodwill under capitalization method, we have to deduct actual capital employed of rupees 15,22,346 from capitalized value of business rupees 17,26,667. Now we got the goodwill of the firm rupees 2,04,321.